Welcome back, friends. Oil prices have fallen to a 6-week low on Friday amidst demand fears after Austria announced a nationwide lockdown. Now, crude is on track for a fourth straight week of losses for the first time in more than a year. The Biden administration is looking at ways to alleviate the surge in gas prices, with consumers paying the most at the pump in 7 years. Now, there are consumers who are looking for some reprieve at the pump. The declines aren't likely to immediately translate into lower gas prices. The national average for a gallon of gas stood around 7-year high of $3.41 on Friday, according to AAA, the American Automobile Association. That's up from $3.34 one month ago and $2.12 last year. The US benchmark for oil sank more than 4% to a session low of $75.37, a price not seen since October 7. Now, crude traded in the green earlier during the day but fell into negative territory following news of Austria's lockdowns. The demand rebound has been a key driver of rise in oil and oil's recovery this year, and any indication that it might thaw will spook market participants. Lockdowns sap the demand for oil because people, when they are restricted at their home, they are not moving around. Therefore, the demand for oil is less. So, lockdowns are really something which is going to spook the market for oil. And this is something which can play its role even further going down the road should the coronavirus cases increase in Europe, Asia, and other parts of the world. The market still remains fundamentally the good positive because of underinvestments over the last many years. The focus has shifted to electric cars, to solar energy, and less on oil. And therefore, in a situation and a scenario where there is less pumping of oil, where the demand is rebounding, fundamentals are in place. However, should the lockdowns return, which is quite a possibility with rising coronavirus cases, you'll find that the demand for oil can, however, come down with supply being limited, and this can lead to a fall in prices more from here. A move below $80 could deepen the correction, perhaps pulling the price back towards the mid 70s or even much lower. The December futures contract, with the more actively traded contract for January delivery, has dipped 3.8% to $75.44 a barrel. Brent crude futures. The international benchmark is traded as low as $78.15 for the first time since October 1. Both WTI and Brent are on track for a fourth straight week of losses. A slight dip in gas demand, possibly due to seasonal driving habit changes, is contributing to some price relief at the pump. And the ongoing tight supply of crude oil will likely keep the gas prices fluctuating instead of dropping for some time. So you will find that yes, the demand is going to be an inhibiting factor, something which will provide an impediment to rise of oil prices. However, the conditions of tight supply, all a variant of the coronavirus cases rising across the world once again, will cause this decline increasingly and will really come back to haunt. Now, while Friday's decline is the largest for oil since July, the commodity has been trending lower over the last few weeks. The Biden administration has repeatedly said that it's exploring ways to ease the burden of oil prices on consumers. They have even been looking at the Strategic Petroleum Reserves, the SPR. But this is something which they can do. There could be a coordinated effort. However, the US has been publicly probing the oil market, OPEC Plus in particular, to ease supply and to provide price relief. Since the summer, and like other countries like India, Japan, China have been joining the chorus. But the important thing is that the strategic petroleum reserves can be used not as an everyday feature. Okay, so this can be done only at a certain point of time, and that can have a knee jerk reaction. Okay, so such a decision of SPR can only fill the gap during temporary production disruptions. This cannot become a regular feature. So there are limited options. Yes, demand could be getting curtailed because of coronavirus cases. At the same time, supply is capped because of, again, because of coronavirus. The drilling has been impacted. So all in all, net and net, we see that there is a scenario where the pressure could be a little bit on the downward side on oil prices going forward. Friends, this can have particular significance for countries which are oil importers. Think India. Their economy could be has been going out of sync with these fallen oil prices. And this is something which may come back to haunt later once the demand picture becomes a little more robust. However, at this point of time, one would definitely go out to mention that the pressure on oil will be there. Now, one more repercussion of these oil prices, gas prices coming down is the inflation. The biggest debate that has been going on amongst the economists is the fact that, well, if these oil prices are coming down, friends, then the inflation is also bound to come down. Okay? So, if once the inflation comes down, then the fact that there's pressure on Jeremy Powell and his team to try and uh, raise the interest rates to meet rising inflation, that pressure may be off the table. Okay. Now, what was being anticipated, therefore, that they will go in and hasten the bond purchases may not happen. Okay. So, therefore, the pressure on interest rates will ease. Yet, I believe that a scenario where the demand shock is happening, and the demand shock could be not only due to coronavirus cases but also due to the wealth effect. True, oil gas prices are by and large and non-discretionary, but then they're used to manufacture many goods which are discretionary in nature. So you'll find that there will be a pressure on the oil prices. Yes, but if people start to consume less of oil, okay, in the future, then you will find that there will be further pressure that may come about on oil prices, will reduce pressure on the Biden administration, on the Federal Reserve team to raise rates. The bond purchases, which was expected to be tapered beginning, can get a little postponed as well. People can breathe a sigh of relief. Yet, all in all, my final statement and conclusion, the demand destruction can be so overwhelming that just because of the wealth destruction that may take place, if these many overvalued assets like stocks get a beating, you'll find all in all the consumption will also reduce of oil and the pressure on oil prices can deepen. Friends, if you're still not subscribed to my YouTube channel, do not forget to do so. And yes, if you would like to be a part of my premium or premium plus channels, telegram channels, then do email me at globalmoneyinvestor@gmail.com. It is globalmoneyinvestor@gmail.com. You can also WhatsApp me at 982-086-1044. Happy investing and have a great and profitable trading week ahead. And happy Thanksgiving to a lot of my American subscribers. Take care. Bye bye.